Well, let's get in Harsha Upadhyaya, the CIO equity with Kotak AMC. Firstly, to start off with, sir, in the last couple of months, we have seen a lot of volatility in the markets. We saw a fall of around 3,000 points. Post that, we have seen nearly 50% of that recovering, at least when it comes to the benchmark. Here on, how are you looking at the markets? Do you expect these kind of correction phases to continue to come into the markets, or it will be an upward trajectory from here on for the benchmark at least?
Good afternoon. As far as next few weeks are concerned, usually the year-end, the activity levels are quite low, and to that extent, probably you won't see much of movements. We get into the beginning of the next calendar year, the sentiments would be driven by what happens during the third quarter result season, and also what will be the expectations from the budget, etc. So to that extent, I would say probably for the next 2 to 3 weeks, markets will and then be dependent on what happens in the beginning of the calendar year.
At least when it comes to the third quarter numbers, the Godrej mid-quarter update was not pretty much on the strongest side. But overall, how are you expecting the Q3 numbers to be for the markets?
Financial year 25 is unlikely to be very great in terms of earnings as far as we are concerned. Maybe it will be slightly better in the second half. That's the expectation that we have, as first half of financial year 25 was quite muted. When you look at Nifty basket, it was just about 3.5 to 4% growth on the earnings. Probably it will improve slightly to higher levels. However, overall earnings are unlikely to be anything great. So to that extent, I would say, yes, sequentially you will see an improvement, but unlikely that will give a huge boost to the markets immediately.
Okay, point taken. Hi, Harsha. This is Anisha also joining in the conversation. What do you make of the consumption sector? Because, of course, Q2 was weak, but we were pinning our hopes that perhaps there's going to be a recovery in the second half of the year. But it doesn't look like it's going to happen in Q3 with the kind of update coming in from GCPR.
It continues to be, hasn't picked up as expected. So we are seeing a little bit of weakness on the urban sector. So overall, I wouldn't say that this is one of the segments where we have huge exposures or where we have been very positive in terms of the earnings growth for this quarter or in the very short term. We will continue to monitor this and see where valuations would become a lot more comfortable for us to really look at investing into this sector. Broadly, we prefer some of the non-consumption oriented sectors at this point of time across most of our portfolios.
Right.
Okay, point taken. I also wanted to take Harsha regarding some of these pharma, exposed companies. And I'm talking about IT, pharma, as well as textiles. These are the exports exposed companies or sectors. Each one has a different tailwind or a headwind to it. IT, of course, what's happening with respect to the Gen AI disruption. Pharma, Biosecure Act seems to have got pushed away. And for textile, there's increased opportunity with the Bangladesh unrest. Within these three pockets, if you had to make a pecking order, what would you recommend?
We would still prefer IT services and pharma, and we clearly believe that there is likely to be a cyclical uptrend in discretionary IT spend going into next calendar year, and also the cloud migration that everyone is talking about, which is a precursor to AI adoption, could also lead to higher business momentum for Indian IT services companies, which are looking at cloud as an opportunity. And on the pharma side, yes, I agree that the latest development where there has been a pushback in terms of the timelines for Biosecure Act is a very short-term negative. However, from a medium-term perspective, we still believe that that opportunity is very large and can drive earnings for many Indian pharma companies. So IT services and pharma would be our pecking order when it comes to export.
Right. Okay. When it comes to the textile sector, the market chatter is that the uptick in order book that we had seen when it comes to electronic manufacturing post the China plus one theme came out, something similar could work in for the textile sector as well because of the issues that we have been seeing in the Bangladesh. So how are you looking at the textile space currently? Do you expect that a similar trend could play in for the textile segment as well?
It's too early to say that a similar large opportunity could be in front of textiles at this point of time. Yes, the disruption that we are seeing in Bangladesh is probably an opportunity, but we need to see how that situation evolves over a period of time and how much of that will benefit Indian textile companies. So at this point of time, I wouldn't really jump into textile sectors because of the unrest in Bangladesh.
Okay, not jumping into it right away, waiting for that entire, opportunity to really transpire. But what's the view on financials, Harsha? Because it used to be that consensus buy. Are you tilting towards more of the private banking space, PSUs, or the ancillaries and the other names?
Within financials, we have been positive on state-owned banks as well as private sector banks at this point of time, and also the capital market facing businesses within financials. These are the pockets where we have been positive and continue to hold positions. There are certain sub-segments where we are not very comfortable at this point of time. For example, the NBFCs which are into MFI segment or which have been heavily reliant on unsecured consumer loans, etc. So that is a pocket that we have been kind of avoiding for some time. And also we have been keeping an underweight stance on life insurance companies where we believe that regulatory overhang still persists, and we would like to wait out and see what are those regulatory changes that we are likely to see, and then probably would take a call on that bucket.
Right, sir. Thank you, sir. Thank you for joining us and giving us your perspective about the markets and the sectors that you're watching out for.
If you like this video, then like, share and subscribe to ET Now.